Okay, good morning. Today we have a lot on our plate. I will tell you the first Learning Catalytics question is going to close in about 1 minute. So you need to make sure you're logged in. So today, again, the session ID, what's due this Saturday? This Saturday you have the Chapter 3 homework. That's the only thing that's due this Saturday. It will take a fair amount of time, so allocate time accordingly. There is a practice exam quiz that's due September 30th. It is not due this Saturday. We'll talk more about that on Wednesday. But this Saturday, what's due is the Chapter 3 homework. We have an exam next week. The exam info is on Blackboard. I would have, if you're in section 7 and 8, I did email you some information about signing up for ProctorU. Here's what we're going to do in class today. Today we're going to cover Chapter 3. We have a fair amount to get into today. And then the last roughly 15 minutes of class, I'm going to talk some about the exam. I'm going to introduce the exam. We're not going to be answering questions about the exam today because we're going to run, we will not have enough time. But then I'm going to start Wednesday with the rest of what I want to say about the exam, and then I'll take questions on Wednesday. So we're going to do some of it today, talk about the end of class today, and then we'll finish the exam information on Wednesday, and I will take questions on Wednesday. And the same goes for the chat room. I'm going to be answering exam questions on Wednesday, so don't want the chat room to blow up with exam questions today. So we will get to exam information towards the end of class, and then we'll do exam questions. We're going to start with that on Wednesday. So exam information, if you're dying to know about it, there is an exam info button on the left-hand navigation menu on Blackboard. Your information for the exam is on there. The exam is next week, Monday, September 28th through Wednesday, the 30th at 4 p.m. Okay, so what's due this Saturday? Learning Catalytics is going to close in about 30 seconds or so. What's due this Saturday? That is going to be the Chapter 3 homework. And again, I'm going to be closing it because we have another question coming up here. But so the plan this week is we are going to cover Chapter 3. Chapter 3 is a fundamental chapter. It is, the homework's going to take a fair amount of time. And then I'll start talking about the exam today, but Wednesday we will start out with the exam information, and I will take questions. So think about, you might want to look at the exam info question tab link on Blackboard before Wednesday, but we'll start Wednesday with those exam questions. But otherwise, we're going to focus on exam or on Chapter 3 today. So with that, we're going to stop this. Okay, and of course, the Chapter 3 homework is the what's due this weekend. Okay, so now in okay, you're going to have to share it. It's not showing online. There. Okay. Okay. So what we're going to be doing is we're going to do a question, and the question is. Okay. So for this question, you need to enter your answer. Your answer has to be entered as one word. There can be no spaces in it. And what you're going to be doing is give me an example of a liability account. And be precise with your language, and don't put any spaces in your answer if your answer is more than one word. And we're looking for an account that would actually be on a balance sheet, you know, what you would see on a balance sheet or in a general ledger. And again, your answer has to be all one word, no spaces. Okay, we're going to have about 30 seconds more. You need to enter one word as your answer. If it's more than one word, just take the spaces out and enter it as one word. So an example of a liability account that you would see on a balance sheet. Okay, final chance, get your answer in. Okay, so what we see, I think it shows better on the screen than on the small devices. What we see are the most common answers right in the middle, and that's great. Accounts payable, accounts payable. I will tell you that I see somebody has said account payable, well actually more than one person has said account payable. It's you generally hear accounts payable. Usually you hear the S on it, so that's not wrong per se. So then let's sort through these other answers. We're looking for a liability. So accounts payable is absolutely right. Notes payable is right. And let's talk about the answers that are not right. Okay, banking. I don't know if that belongs with another word, but I can't think of any account that has the word banking in it. Again, we're looking for liabilities that we would see on the balance sheet. Balance sheet is not a liability. Okay, so that's not an example of a liability. Equipment. What kind of account is equipment? Asset, right? Remember that yellow sheet that we talked about that I handed out on Wednesday last week? Or you have it online, it's on Blackboard. That has examples of assets, liabilities, and equity accounts on it. This should be a pretty easy question because it's listed right there. So equipment is an asset. Equity is not a liability. Equity is an equity account, but that's not even an account. That's an account type. Credit, I can't think of an account with the name credit in it. So that would not be. Loans, you're not going to see loans. You're going to see, typically you're going to see loans payable. You're going to see notes payable. So you normally need that payable. Balance is not an account. Current liabilities is not an account. Current liabilities is a category. So you have a lot of different liabilities that add up to be current liabilities. So current liabilities would be things like accounts payable, short-term notes payable. Those are examples of current liabilities. But current liabilities are not a liability accounts themselves. Expenses are equity accounts. They are not liabilities. Borrowing money. Borrowing money causes a liability. Borrowing money results in notes payable or loans payable, but it's not an account, a liability account. Debt. Debt means the same thing as liability, but debt is not an account per se. It's not a liability account. Think accounting PayPal. No, that's not it either. Use PayPal to pay with, but I don't think a liability is associated there. So that was just a quick review of what liabilities accounts are. Just a reminder that when you get questions like that, you have the yellow sheet. This should be a pretty easy question. Pick an example and type it in. But I also like it because it allows us to talk about some common misconceptions. Okay, so with that, we are going to go back to what we're covering today. Okay, so today we're going to be talking about accrual, accounting, and income. If you've not had accounting in high school, this is going to sound like a foreign language, and it's going to feel kind of weird. The things don't totally make sense at first, but Accrual accounting is the basis of accounting that all businesses, 99% of businesses use. You're required to use accrual accounting if you're of any size, basically. You need to use accrual accounting. So we're going to start by talking about how accrual accounting differs from cash basis. So I'm going to start with cash basis. So on the far right, cash basis accounting. You only record transactions when cash exchanges hands. Okay? So cash basis accounting, you only record cash receipts and cash payments. So that is all you do. It is only used by smallest businesses and individuals. When we talk about doing our own taxes as people, most of the time we all use a cash basis, where our income is reported based on the income that we actually received during the year and the expenses that we actually paid. So cash basis is what most of us are most familiar with, and that seems we like to see, well, we paid cash, we received cash, and we record things. And that's cash basis. That is not acceptable under generally accepted accounting principles. Businesses have to use an accrual basis under U.S. generally accepted accounting principles. We record revenue when it's earned under accrual accounting, and we record expenses when we incur them. And how that is if I have a doctor's office and a patient comes in and gets $1,000 worth of services, and the patient doesn't pay, and we bill the insurance company, the doctor's office records revenue that day because the services were performed that day. We record revenue when the services are performed or when the expenses are incurred, not necessarily when cash changes hands. And we're going to go through an example here. So there are several slides that give more detail on this cash basis versus accrual basis. I'll leave those to you. They are good slides. I'm not going to read them in class, but I'm not skipping them because they're not important. But because I want to talk about an example, and I want to show the difference between cash basis accounting and accrual basis accounting with a very, very simplistic example. So this is May. In May, we have a guy who's operating a lawnmower business. So he goes out and he finds a customer, and the customer says, okay, you can mow my lawn for June, July, and August. Here's $600. So this happens in May. So in May, the lawnmower guy gets $600. And then in June, July, and August, lawnmower guy has to rent a mower to actually mow the lawns. So there's 4 flows of cash here. There's $600 that he gets in May, and then there's $50 he pays in June, $50 in July, and $50 in August. So those are the cash flows involved here. So we're doing the accounting for lawnmower guy. So if lawnmower guy were on a cash basis, what you would see here would be in May, lawnmower guy would have $600 of revenue. This is cash basis. So this is what's not allowed, but this is, and we're showing why. So in $600 would be revenue in May when he got the $600. So remember, he hasn't done anything in May. The customer has just given him $600. And then in June, he'll have a $50 expense, and he'll have a $50 expense in July and a $50 expense in August. So when he goes to prepare financial statements for each month, he would show revenue, net income of $600 in May because he got $600. And then in June, he would lose $50, and in July, he would lose $50, and in August, he would lose $50. So if this were lawnmower guy doing decision making, he'd say, well, I should just do more of what I do in May and not do anything that I did in June, July, or August. And the problem with that is he didn't do anything in May other than collected cash. And I know we would all love to just have people give us money and not have to do anything, but the reality is in May, he has a liability then. He collected $600. He has an obligation to perform those services, and he's going to do that over June, July, or August. So he didn't do anything to earn the money in May, but in June, July, and August, he's showing a loss. So this is cash basis accounting. And the problem with it is it doesn't show actually what was happening. It didn't show that he was earning the money in June, July, and August. It also, if you prepared a financial statement, it would not show a liability in May for him. It would just show, so if investors were looking at this, investors would go, wow, you have $600 revenue. No liabilities would show. So this whole situation of, well, I've got the money, but I have liability to perform services would not show, and that would be misleading. I mean, of course we can see it because it's only our little micro situation where we only have this little bitty thing, but this is cash basis accounting. So now let's do accrual basis accounting. So accrual basis accounting is what businesses are required to use. So back to our same situation where you got $600 cash and then paid out the expense each month. What he's going to do is the $600 revenue is going to be split over the 3 months that he actually earns it, where he's earning the revenue. So he mows the grass in June and he earns $200 of that $600. So he has net income of $150. So it's the $200 he earned minus a $50 rental fee, so he earned $150 income. And that happens in June, it happens in July, and it happens in August. So when we look at his financial statements, he will show 0 in May. He didn't perform any services in May. He just collected cash. But then in June, July, and August, he earned $150. And that's a better picture of what happened. Under accrual basis accounting, when he gets that $600 back in May, he's going to show cash and he's going to show a liability, and a liability called unearned revenue. Unearned revenue says, oh, somebody paid me in advance and I haven't yet earned this money. So accrual basis accounting is what we're doing in this course. It's what you'll do, what businesses do across the board. And it's important to realize that when cash changes hands, income is not necessarily impacted. And we're going to see lots of examples of that over this. Okay, so what we're going to do today, we have several little exercises, and a lot of this is just recognizing a little differences in language. What makes something an expense versus cash. So we're going to go through it, and I'm just going to skip to the requirements. In short exercise 3-1, it asks, A says, how much was Southeast net income for the year? And requirement B was how much was their cash balance at the end of the year. So those are two very different questions. The first one, how much was Southeast net income for 2014? Okay, so net income, whenever you see net income is revenues minus expenses. Okay, so net income is revenues minus expenses. It doesn't say cash received or cash paid. It's revenues minus expenses. Now, revenues, the first sentence says, Southeast Corporation made sales of $825 million. So they made sales. That's their revenue. Sales revenue, they mean the same thing. So we're going to have sales revenue of $825 million. Now the next sentence says, of this amount, Southeast collected cash for all but $27 million. How much cash Southeast collected doesn't have any impact at this point on their net income. So we can ignore that sentence for now. But the next sentence, the company's cost of goods sold was $255 million. Cost of goods sold is typically one of the biggest expenses a company has. It's one of the only expenses that doesn't have the word expense in it. So when you see cost of goods sold or cost of sales, that's an expense. So cost of goods sold was $255 million, and all other expenses for the year were $325 million. So we have cost of goods sold of $255. We're going to subtract it. And again, we're trying to get an answer, so I'm just showing the calculations to get there. And then we're going to subtract all other expenses for the year of 325, and we're going to come up with our net income of 245. So to answer A, question A, we want to say here's our revenues and here's our expenses. And it tells us here's our cost of goods sold, here's all other expenses. It's telling you what your expenses are. Okay. Notice that we didn't rely on how much cash they actually paid out or how much cash they actually got. That question applies to part B, where it's saying what's their cash balance. So what's their cash balance is part B. Okay. How much was Southeast cash balance at the end of 2014? Well, the ending cash balance is going to be what cash we started with, we add what we collected, and we subtract what we paid out. Okay? So, beginning cash, it tells us somewhere in the sentence, near the end of the problem, beginning cash was $75 million. Okay? So we're looking for how much cash did we end the period with. We have beginning cash of 75. Okay? Then how much did we collect? Now to collect it, we have to make a calculation. We collected cash for all of the sales except $27 million. So we have to do a little calculation to get there. So we had sales of $825 million. We subtract the $27 million, and we get $798. So they've collected cash for everything but $27 million. Presumably the $27 million is accounts receivable. Okay? Okay, so then next up, we have the payments. And our payments are going to be, they paid $350 for inventory and $255 million for everything else. So they're telling us, when you see the word paid, that's, unless you're told otherwise, paid implies that this is cash that they're paying out. Okay, so our ending cash is $263. Okay, we're going to do another homework problem, but before we do, we are going to do another question. This is another one, a one-word answer. Okay, so you'll be entering in one word, or if it's more than one word, enter it without a space. Okay, so again, this is an example of an asset account. You want to make sure you get an answer in and you get an acceptable answer in. And you have about 10 seconds left to answer. Okay, again, looking at the screen, because sometimes it's easier to see one of these on the screen than on the device. Okay, so the question was an asset, an example of an asset. An asset is on a balance sheet. So the biggest answer, accounts receivable, yes, that's absolutely right. Equipment, cash, accounts receivable, those are all right. Okay, so let's start dissecting the other ones. Land is an asset. Inventory is an asset. Notes receivable is an asset. Investments are an asset. Okay, so you got those. You're doing well. Let's talk about what might not be an asset here. I'm assuming accounts receivable belongs together, so we'll go with that. Money is not an account, okay? You see cash and cash equivalents. You might see money markets, but you don't see money. An asset listed on the balance sheet is not going to be money. Liquid, not sure where liquid goes, but liquid probably is not an asset. Depreciation is an expense account, okay? So it doesn't belong as an asset. Income statement is not an account, and it's not an asset. Property is typically not going to be listed as just property. It's going to be, the accounts on the balance sheet will be something like land or equipment or buildings, or sometimes you'll see property and equipment, or you'll see property, plant, and equipment, but you don't typically just see the word property. Fund is not an account, okay, so that's not going to be it either. Let's see. I think I've made it through about all of those then. Balance sheet. Balance sheet is not an asset. The question was, give an example of an asset. Okay, that would be on a balance sheet. Balance sheet is what assets are listed on. Okay, so there's that. So we'll go through, we're going to have more of those. Again, that yellow sheet, keep in mind when I put these kind of questions up, they should be easy, give me questions, because the yellow sheet that I handed out gives you examples of assets, liabilities, equity accounts. Also, that yellow sheet is part of your exam equation note sheet that you get. So you should use it to refer to, because it will get you some easy points. Okay, so next homework problem. Next homework problem. Okay, so next homework problem, we're going to do exercise 3-2. It began, Westwood Corporation began the year owing notes payable of $4.7 million. So we're going to read through this, skip to the bottom, and see what we're being asked for. We're being asked for the income statement interest expense for 2014. So they want to know, what would interest expense be for 2014? And then on the balance sheet, what would be notes payable and what would be interest payable? Okay? So as we read then, for interest expense is going to be, it tells us interest expense for the year was $0.6 million. So the answer for the first one, we don't have to do any calculations. It tells us interest expense was. Okay? So there we go. Now, the next one down, notes payable. Notes payable for the year is going to be, well, this is at the end of the year. How much notes payable do we owe? So when we look at notes payable, we say, okay, we began the year owing $4.7 million. So we started the year with $4.7 million. We borrowed another $1.7 million. Okay, so we have $4.7 million plus $1.7 million, and then it says we paid off $1.6 million. So what we end up with then is, when we want to know how much do we owe at the end of the year, then what we owe is $4.8 million. And then the last question here says, what's interest payable? Interest payable is interest that we have incurred but won't actually pay till next year. So let's say it tells us 0.2 million of interest payable accrued. So that means there's our interest payable at the end of the year. It is the 0.2 million. Okay, so that question is just sorting through what you're given. Now, when we talk about interest or expenses, so we talk about expenses. When an expense is on the income statement is when we incur it, regardless of when we pay it. Let's talk about my electric bill. Okay, so let's say my electric bill is through the 20th or through the 25th. So it goes through the 25th. I've used this electricity, and the bill comes, and it's not due. This is December 14. So the bill's not due till January 15th. So as a business, I'm going to take the amount of that bill, and I'm going to show it as, I'm going to recognize it as utility expense in 2014 because it's for electricity I used in 2014. I'm going to pay the bill in 2015. So what I'm going to do is what we're going to do in this chapter. When I get the bill, I'm going to accrue for it. And what that means is I'm going to say, oh, I have utility expense in 2014 because I used the electricity, but then I'm going to pay it in 2015. When I pay it in 2015, I'll spend cash and I'll reduce the liability that I set back up in December. So in December, when I get that electric bill, I'm going to recognize utility expense, and I'm also going to recognize that I have a liability. I owe the electric company money, even though I'm not paying it till January. Why does this matter? Because investors, when they look at our financial statements, they want to know what all our liabilities are. And one little electric bill, not likely to make a difference, but if you can keep doing that and ignoring liabilities you don't have, this can be a substantial problem when companies issue statements if they don't recognize all their liabilities. And so anyway, so if I get an electric bill in at the end of 2014 for electric I used in 2014, that electric expense is going to be on the income statement in 2014, and it's going to not be on the income statement for 2015, the expense. So let's try this. Okay, so an expense incurred in 2014. So this is my electric bill. Is not paid until 2015 because the bill comes and you don't have to pay it for a few weeks. Using the accrual basis of accounting, the electricity expense should appear where? In 2014 income statement, or 2015 income statement, or both, or neither. So give that a shot. The rule with expenses is they're recognized the year in which they're incurred, that you used the thing up. In this case, we substitute electricity. So an electricity expense, or like we use electricity. We incurred it. We used it in 2014, but we're not going to pay for it till 2015. So the electricity expense, where does that show up? 2014 or 2015? Okay, again, we have electricity that we used in 2014. The rule is that expense belongs in 2014. Okay, so the electricity expense, the expense associated with that electricity, I'm using electricity as my example, it shows up on the income statement in 2014. It does not show up in a later year. It shows up in 2014 only. I'm going to close this question in about 10 seconds. Okay, so 2014. So when we recognize expenses when incurred, so when we use it up. And revenues, we recognize when we earn them. Okay, so the revenue recognition principle, what I want to take away from this is a big, long definition when what we really need is when the business delivers the goods or services to a customer. Okay, there's a lot of other words there, but basically we're going to recognize revenue when the business delivers the goods or performs the services, regardless of when cash exchanges hands. So we're only going to recognize revenue when we perform the services or deliver the goods. So we are only going to recognize revenue when we fulfill our commitment. So I think I have a question coming up here. Oh, wait a second. I got rid of the question in the slides that I wanted. Oh, that's a good. We'll do this one. That's good. Okay. Okay, so the revenue principle requires that a business record revenue when the business does what? Okay, we're going to close this question in about 10 seconds to get your answer in. When we're talking about this, the revenue principle requires that a business record revenue when the business what? It's not received an order. Okay, it's not received an order. It doesn't matter if we get an order or not, that's not revenue. We haven't done anything to earn it. Prepares the invoice for the customer. That's not revenue either. We can produce the invoice. We can prepare the invoice before or after, whatever. That's still not the revenue trigger. Deliver the goods or service to customer. That's absolutely the answer. And then D, receive payments from a customer. That has zero impact on our revenue recognition. Revenue recognition occurs when we deliver the goods or perform the services. Okay. So, we deliver the goods or services to a customer. Okay, now we're going to do another one, and this is another one picking out numbers. Short exercise 9.3, we're looking for what the company would report on their income statement, on its balance sheet. So we'll start with the income statement. It tells us that this airline paid salary expense of $44.1 million, and then it accrued salary expense of $2.2 million. So what it's doing is all year it has $44.1 million of salary, and then on December 31st, it owes some more salary that its payday doesn't fall until January. So it's got to accrue for the extra salary that's not in 2014. So the salary expense on the income statement is going to be the $44.1 million and the accrual of $2.2 million. So it gives us total salary expense of $46.3 million. Okay, next up, the balance sheet. So the balance sheet, remember income statement is revenues and expenses. Balance sheet is assets and liability. So what we're going to see here is accrued salary expense. So we're going to have an account called salaries payable. And again, we're going to see these coming up with adjusting entries. This is just to get familiar with identifying accounts and where they go. Okay, so next up, we're getting into adjusting entries. Now, adjusting entries are going to be a large portion of what we do the rest of today and what we do on Wednesday. Adjusting entries are journal entries that we make to make sure that our revenues and our expenses are in the right accounting period. For example, that electric bill that comes at the end of the month that we don't pay till next month, we want to make sure that we recognize the electric this month, not next month, and there's a lot of things like that. We're going to go through 3 categories. Adjusting entries are made generally at the end of the period. They're absolutely made at the end of the year. They're made any time we're going to issue financial statements. So they're going to be made at the end of the quarter, sometimes at the end of the month, depending on the situation. Every adjusting entry will include at least 1 income statement account and 1 balance sheet account. Okay. And we're going to go through a bunch of adjusting entries. Okay, so there are 3 basic categories of adjusting entries. And if you have the PowerPoint slides, there's a lot more slide detail for you in those, but the 3 basic categories are deferrals, depreciation, and accruals. Okay, so I'm going to define each of them, and then we're going to, between today and Wednesday, go through examples of these categories. So a deferral is an adjustment for a payment of an item or receipt of cash in advance. So a deferral would be a lawnmower guy getting the $600 for June, July, and August and May. That's a deferral. That needs a deferral adjusting entry. So deferrals are prepaid expenses or unearned revenue. So prepaid expenses, prepaid rent, prepaid insurance, something that we pay in advance, supplies. Okay, so deferrals. The next category of adjusting entries are depreciation. Now, depreciation is when we buy something big, equipment or a building or a car. So we buy something, it costs a lot of money, and it has a life of more than a year. It's going to benefit us for more than a year. It's going to have a 3-year life, a 5-year life, a 30-year life, or something like that. So what we do is when we buy that car, we don't take the $35,000 we pay for the car and put it in the income statement this month. We put it in on the balance sheet, and then we have something called depreciation. We make depreciation journal entries, adjusting journals at the end of the period. Depreciation is one of the topics of Chapter 9. So in this chapter, we're just going to do just a little bit of depreciation, and then we'll get much more in-depth with it in Chapter 9 down the road. Okay? So depreciation is one of the adjusting journal entry types. And then the third type are accruals. Accruals, the opposite of a deferral. In this case, we incur the expense or we earn the revenue before the cash changes hands. So examples of this, accrued revenue, the company accrued, this is when you go to the doctor's office, they do their thing, they earn their $1,000, and then they bill the insurance company. They do an accrual to recognize the revenue before they get the cash. And we're going to go through examples of each of these categories. So deferrals, depreciation, and accruals are the 3 types of adjusting entries. We're going to do today, we're going to start with deferrals. So deferrals, deferrals are a prepaid expense, a type of prepaid expense. Cash changes hands. So we pay for the expense before we actually record the expense. Prepayments, common prepayments would be rent, supplies, insurance, advertising. So we pay for it before it actually is used up. So we're going to go through an example, a prepaid rent example. Okay, so we have a company. Let's assume that they prepay 3 months of store rent. This is quite common commercially. We'll pay rent several months in advance. Either we get a discount on it by doing so, or they require it by the terms of the lease. So in this case, they prepaid 3 months store rent, $3,000 on June 1st. So that's 3 months of rent. The entry for the prepayment of 3 months rent is as follows. So if we start on the steps that we talked about before, just pick an account. So there's 2 accounts involved in this transaction. The first one, let's go with prepaid rent. Prepaid rent is going up, right? Because we've got prepaid rent. We're getting prepaid rent. It's increasing. Prepaid rent is an asset. So to increase an asset, I'm going to debit it. So this is the transaction, not the accrual entry, not the adjusting entry. This is the original transaction because I want to show you why we do the adjusting entry, why we do it. So when we originally paid this rent, we would debit an account called prepaid rent. That is an asset because it has future economic benefit to us. It gives us the right to use this store for 3 months, June, July, and August. So the credit here, I got prepaid rent. What did I pay for it with? I paid for it with cash, so I'm going to credit cash. So there was my entry to prepay the rent. So I debited the asset, credited cash. So as of June 1st, I have an asset. I would have debited prepaid rent. I paid cash with it. We're not really worried about cash, but I was just doing that to be complete. So at June 1st, I have an asset called prepaid rent for $3,000. That represents 3 months of rent. So this is June 1st. So now fast forward to June 30th. Now it's June 30th. So June 30th, it comes along, we're going to issue financial statements, and we have on our balance sheet an asset called prepaid rent for $3,000. But it's June 30th. 30 days have gone by. We've used up 1 month of rent. 1 month of rent was $1,000 because it was $3,000 for 3 months. So we have to do an adjusting entry to do 2 things. Recognize, 1, that we have rent expense for 1 month, and 2, to reduce our asset by $1,000. Now our prepaid asset was at $3,000 debit balance. So what we're going to do is we're going to take $1,000 out of the prepaid rent account, and we're going to debit rent expense. So what we're doing here, we're debiting rent expense because we're recognizing that we have rent for that month of June. We're going to credit prepaid rent, so we're getting it out of there. And what happens to my prepaid rent account is I started with the $3,000 when I purchased it. I have my adjusting entry to take $1,000 out. So I end up at the end of June with a balance of $2,000 in my prepaid rent account. Okay, and I have $1,000 of rent expense. So that's an example of an adjusting entry. We're going to have a list of adjusting entries every time we do prepaid rent. Adjusting entry, it will look like this. We will always debit rent expense and credit prepaid rent. So we'll have kind of a standard list of adjusting entries. But with that, I'm going to switch over to exam information. So what we're going to do now, and we're not done with learning catalytics. There'll be another question coming up here. But what I'm going to do now is I'm going to talk about the exam. And I'm going to talk till I get to a certain point, and then we're going to stop. And I want you to come on Wednesday with questions, because we will start Wednesday with the rest of the exam overview and questions. And I'm going to take questions. I'm going to answer questions both from online and in class. So our exam runs Monday, September 28th through Wednesday, September 30th, okay, 4 p.m. So we do not, first off, we do not have class next week. Your job next week is to take that exam. I don't like that font. Okay. Okay, so Chapters on the exam, chapters 1, 2, and 3. 3 is this week we're covering. So everything we've covered in class to this point, everything that you would have had in the chapter reading, everything we've done to date is fair game for the exam. Now, all times that I talk about in emails, in announcements, in class, are Eastern Standard Time. I say that because we do have some students who are not located in Eastern Standard Time. So if you're someone who's not in Eastern Standard Time, you need to convert things to Eastern Standard Time. Okay, so now here's where I'm going to talk to two separate groups of people. I've got sections 1 and 2, and I've got sections 7 and 8. If you switch sections in the first week and you've not emailed me, you probably need to do that because there's a good chance you won't be able to take your exam if you don't let me know. But right now, I'm going to talk to you about exam sections 1 and 2. There is a little bit difference between 1 and 2 and 7 and 8, and I'm going to cover it in these first 2 slides. After that, everything's the same. Okay, so sections 1 and 2. So if you're in sections 1 or 2, listen to me. Also, read my emails. It sounds funny, but I will email you and I will say, you're taking the exam here. And that's not, don't read that as, I'd like you to take the exam here, but you can take it wherever you want. That's where you're taking the exam. If there's any debate about that, you need to email me, but I'll probably tell you you're still taking the exam there. But those emails do confirm where you're taking the exam. Every semester, I have someone show up in the computer lab and their exam won't open. And they say, and usually it's like the last minute, and they'll say, well, but I didn't know. Well, I'll email you and I'm telling you where you're taking the exam. If you're in section 7 and 8, you got an email from me on Saturday that said you're taking your exam on ProctorU. So do pay attention to those because I am confirming what's going on. You cannot take the exam in the computer lab if you're in sections 7 and 8. If you're in sections 1 and 2, you cannot take the exam on ProctorU. It simply will not work. If you switch sections, you need to email me to verify that you're set up correctly. Some of you have already emailed me, and if it's gotten an email back from me, we're good. But if you've not, you probably need to do that. Okay, so sections 1 and 2. So sections 1 and 2, folks, this is for you. Your exam will be in the computer lab on the second floor of the College of Business, 9 a.m. to 9 p.m. Their lab opens at 9. I say 9. Generally, they're open at 8. You could start taking your exam at 8. The official start time's 9, but you could go early. You have to start by 7 p.m. to be able to start it, to be allowed to start it. And it will end at 9 p.m. So you have to start, you have to start at least 2 hours before the end of proctoring hours. Wednesday, you need to start by 4 p.m. The exam ends Wednesday. Your last opportunity to start it is 4 p.m. So line's going to be to go long, go early. This generally, if you go Monday or Tuesday, you're in great shape. If you go Wednesday morning, you're generally okay. There's no way to predict lines. There are no appointments in the computer lab. The last 2 years, we've generally been okay because most other exams are not ending on Wednesday. A year or two ago, the week before spring break, the lines for the computer lab were 3 or 4 hours long to take the exam. Okay, and that was like this perfect storm of everybody wanting to leave for spring break. We weren't in that because we end on Wednesday. So just know that I have over 400 students taking the exam in the computer lab. So if you all showed up, if you do the math, there are there's 72 computers in the 2 labs, assuming that no other classes were going on. That still takes several hours to turn over 400 people. So my advice to you is take it Monday or Tuesday, because if you take it Monday or Tuesday, regardless of how you're taking it, you still have a backup day in case something goes wrong. So there's that. No appointments, and you might have to wait in line. Generally, if you go early in the morning, and you're used to an early morning class, right? You're here, So that's a good time to go take it. Calculator, exam equation sheet, and scratch paper provided for you in the computer lab. You need to take a pencil and you need to take a photo ID, a driver's license or your flashline ID card. So that's what you need to take it. They will provide the calculator, scratch paper, and exam equation sheet, which we'll talk about in a moment. Okay, section 7 and 8. So now we're on to the 7 and 8 people. You take your exam on your own computer in a private location using ProctorU. Private location means there's not people talking around you. You need to have a quiet place to take it. You have to have a webcam and high-speed internet, and you want to test your equipment before September 28th, before you take the exam. Exams are stressful enough, so you want to take away as much stress as possible. I emailed you. If you're in section 7 or 8, you got an email from me this weekend. One of the links in that email was how to test your equipment for ProctorU. You want to make sure that your exam day is as low stress as it possibly can be, given that it's an exam. Okay, you have to start the exam no later than 4 p.m. on Wednesday. You have to, if you're in section 7 or 8, here's the good thing. The good thing is you have appointments to take your exam. The downside of that is you have to plan ahead a little bit. You have to make your appointment. As long as you make your appointment at least 72 hours in advance, there's no fee. If you wait till the day of the exam to say, oh, I need to take the exam, they're going to charge you $5 or $6. So just schedule it ahead of time. The other plus to scheduling ahead of time, you get your choice of when you want to take it. They can't accommodate everyone at 2 p.m. on Wednesday, so appointments will fill up and you'll have to take it maybe at a less desirable time. If you're ProctorU, if you're taking the exam on ProctorU, you can take it anywhere between 9 a.m. on Monday and start it before 4 p.m. on Wednesday. So if you want to take it at 11 p.m. at night, that's fine. You just schedule it. There's appointments in the system, and I sent you emails about how to do it. ProctorU, you will need your own scratch paper. They can't hand you scratch paper online, obviously. So you need your own blank paper. You'll be showing online that it's blank. And you will need a non-programmable calculator. You will also need photo ID. You will need to identify yourself to ProctorU. And ProctorU will push out a PDF of the exam info sheet for you to use. So they will give you the exam info sheet online, but you need scratch paper, probably a pencil, photo ID, and a non-programmable calculator if you're taking it in section 7 or 8. Okay, so now, that was the last of section 7 and 8. So now everything I say after this point applies to all sections. So the only difference between the sections is where you take it, and you are getting emails from me about your exam location, and it's not interchangeable. Okay? So exam basics. From the exam time allowed is 120 minutes. On this first exam, there will be it should average about 45 minutes for most people. So what that says to you is if you need a little extra time, you're likely to have it. You have 120 minutes. When you log in, you'll see once your exam starts, it'll have the countdown timer in the corner to tell you how much time you have left. But most people will finish right around 45 minutes, 50 minutes. Do not plan to take your exam and say, oh, my appointment's at 10, I've got a class at 11, I'll just take my exam at 10. Invariably, if you do that, you will run into a problem. It's Murphy's Law. There will be some problem. There'll be a line in the computer lab. There'll be something that goes wrong. You won't be able to get started on time, or you find the exam takes you longer, and that's fine. You have 120 minutes. Make exam day as low stress as you can, and I would allot at least 2 hours for the exam, and if you finish early, then you've got some extra time. But don't try to squeeze it in, and then when something goes wrong, you can't finish it. So that's just words of what I've seen. Okay, on your exam, there will be 3 to 4 exercises. Where do those exercises come from? Your homework. Your exam is in My County Lab. It's going to look and feel just like your homework, other than it doesn't have the Help Me Solve This button and things like that. But you will get 3 to 4 exercises. Those will count for about 25% of your exam. And there will be 22 to 28 multiple choice questions, and those are about 75% of your exam. You're provided an exam info sheet. It's already filled out with notes. You don't bring your own note sheet. I've done it for you. You can see that exam info sheet at any time by going to Blackboard and click on exam info. So in the lab, the proctor will give you an exam info sheet. If not, ask for one, but they do have them. So you will get a sheet when you get there. Online, ProctorU will send you out the PDF. It'll push out on your screen. If they don't give it to you, ask for it, because you do get it. They push them out. And this exam sheet is on Blackboard under exam info. There's also a link you can get to it by going to tinycc/exam1notes. And it's on Blackboard. You can see what's on it. It looks the first part of it is that yellow sheet that I hand out in class, the debit credit handout. You will have that. That's part of your exam info sheet. I think it's 2 pages for this exam, but there's other information on it too. I can't remember. Don't quote me on the 2 pages, but there's other information other than what was on the debit credit handout. But do use that ahead of time so you're familiar with what's on it. So when I ask you, for example, which of the following is an asset, that should be a really easy question because you've got those listed on the sheet. So know that you get the exam info sheet and use it. Okay. So this is an administrative thing. I've quoted the exam, you have to start it by 4 p.m. on Wednesday. Okay? I do not recommend that anyone wait until Wednesday afternoon to start it, because that's when you get the long lines, a long line, a computer trouble, flat tire. None of those are excuses to allow you to start late. But my accounting lab, I have to put in a different end time. My accounting lab, it's going to show you, I think it's going to be open until 9 p.m. or something. That's not saying you get till 9 p.m. to take it. There are people in this class who get accommodations to take the exam, and so they get a different amount of time. And they still have the same rule of start by 4 p.m. So that's why I have to put an ending time later. So don't look at the end time in my accounting lab. It is not, you have to start the exam by 4 p.m. on Wednesday. My accounting lab doesn't have the correct ending time. 7 and 8, here's the thing. If you're going to take your exam, either you didn't schedule or there's a problem, call ProctorU on the phone. They have a phone number you can call. During exam week, by the way, if you email me on Monday, Tuesday, Wednesday, I have an auto reply that's going to kick back to you the phone number for ProctorU. It's going to kick back to you the My Accounting Lab URL for help. So, and I'm constantly checking my email, but when you get an auto reply from me, I'm just trying to anticipate what you might need. Like that phone number, if you're in a panic, sometimes you're in a hurry, you don't know it, email me, you'll get the ProctorU phone number sent back to you. But anyways, so don't rely on the any time in My Accounting Lab. You have to start the exam by 4 p.m. There will not be a curve on the exam. Typically, this first exam, there will be no curve. The average should be, I'm guessing, in the neighborhood of 72%, 73%, somewhere around there. I would say several people in this class will get 100% on the exam. There will be several people with 100%. I would guess that probably 20% of the class will get A's on the first exam. And sometimes I hear, well, those are all the accounting majors getting A's. Accounting majors only make up 5 to 10% of this class. So it can't be all accounting majors. There's lots of, I'm thinking of a managerial marketing major last year that did really well. So there's all kinds of majors that do well. Just because you're not accounting doesn't mean you won't do well on the exam. You need to put the time in. Okay, basic exam rules. These rules are important. You need to follow the exam rules. If you don't follow these rules, it's going to be an automatic 0 and you'll be reported to the university. No cell phone visible either. These rules apply to ProctorU and the computer lab. It doesn't matter how you take it. No cell phone visible. Don't check text messages. Don't touch your phone. It should be put away. It should be turned off or turned to silent. Just don't. Your phone doesn't belong anywhere near the exam. It cannot be laying on the table. It cannot be visible. No talking or texting during the exam. Don't leave your computer. Once you start that exam, you have to finish it. You cannot come back to it. Respond to the proctor if he or she has questions. This is online or in the computer lab. So you need to pay attention. Well, you'll hear if the proctor has questions. No other windows are open during the exam. No notes other than the exam equation sheet provided for you, and you can have blank scratch paper, but that's all determined at the beginning of the exam. Section 7 or 8, I'll be emailing you about this too, but you'll have a proctor in the corner of your window. I highly recommend that you minimize that window, okay? So you can just hide them. Don't close it. Minimize them. Before you close the window, so you take your exam, you go submit, it's in my accounting lab, you submit it, it'll say, are you sure? You submit it, you see your exam score. Then ask the proctor if you can leave. This is section 7 and 8. Ask the proctor if you're done, if you can close the window. This is ProctorU. Then you can close them once they have told you that. If you close your exam, if you close the ProctorU window and you still have your exam open, that's not a good situation. I will hear about it and you will get a 0 because you cannot have an exam without a proctor. Now, automatic 0 if you violate any of these rules. In the last 2 years, I believe I've had 2 cases of people, and that every one of them breaks my heart, but I am proud that I've only had 2. I do not want you to cheat. If you violate any of these rules, whether you say you're cheating or not, it has to be reported to the university. We have a policy at university that faculty, if there's any sanction applied, like any penalty for violating a rule, we have to report you. And I am not going to jeopardize my job because you made a bad judgment call. You are much better off not cheating and not trying to get away with something. You're better off with the grade that you earn than one you're trying to cheat for. Also, keep in mind, no matter where you take the exam, it's being recorded. In the computer lab, there are cameras for security. They have the camera footage. There are cameras for security in many of the classrooms in the College of Business. If you're on ProctorU, you will be recorded also. So know that in one of the cases that I had to report, I had a video from ProctorU where there was someone reading sections of the book to the person as they took an exam. Okay, that records pretty well, you know. So know that please don't be the person that I get the email about, because I hate it. And I absolutely hate it when people come to my office and are crying, and I'll want to cry with you, but I'm still not going to change my mind. I'm still going to be reporting you. So please follow the rules. If you have any questions ahead of time, we'll talk Wednesday some more. Let's see what we have here. Okay, so on Blackboard are detailed information about the exam rules and how to prepare for the exam. What I want to do now is I want to do one last question in Learning Catalytics. I'm going to push it out there and then it'll show on the screen. Okay, so you've got a question in Learning Catalytics. I'm going to display it in just a minute. Okay, So let me remind you here that revenue recognition rule. A company recognizes revenue or earns revenue when they deliver the goods or perform the service. When they actually, this is Starbucks, right? So Starbucks serves coffee. That's when they serve the coffee is when they earn the revenue. So the question here is a customer pays Starbucks $250 on March 15th for coffee to be served at a party in April. Okay? So Starbucks gets the money in March. They're not actually going to serve the coffee until April. Has Starbucks earned revenue on March 15th? Yes or no? The rule is you do not earn revenue until you perform the service or deliver the goods. Okay, I'm going to close this question in about 10 seconds. So you want to make sure you get your answer in, okay? Make sure you've answered it. Yes. Yes, we do have class on Wednesday. Wednesday we will be starting with an overview of everything else about the exam. I will be taking questions about the exam, and we have lots of information to go over about the rest of Chapter 3. Okay, I'm going to close the question. Go ahead.